Hi and welcome to StockInvest.us podcast for week 22. Last week became a very good week where both nasdaq and Dow Jones were up more than 6%. And as I said in last week's podcast, I thought I would be able to make some money. And I did. I will tell you more about that in the trading tips where I will reveal the actual profits I made from the trades last week. This week is a new week, of course. Will the good spirit in the markets continue this week? It was especially Friday last week where markets went up more than 3% due to some positive statements from the Fed. Will this continue through this week? What about the buy and sell signals? What are they? Are they still low or are they going up? As usual, I will try to tell you everything I know and try to prepare you for this shortened trading week ahead of us, because today is Memorial Day and the markets are closed. There will be some trading tips at the end of the podcast, but the very first we will do the usual thing. We will have a quick listen to the disclaimer, then I will go to the market section, tell you a little bit what I think will happen in the week ahead of us, what are the key things that you should look out for, and some quick analysis of some of the major stocks, and then the trading tips. So stay tuned for the next some 30-35 minutes, and hopefully you will be able to make some gains during this week.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
It's good to be back after 3 weeks of traveling, and hopefully the sound quality in this week's podcast will be a little bit better than in the previous, where I had to use the traveling gear. And in addition, I'm back on the screen for you who watches this podcast on YouTube. You will also see my face. Not sure if that will help your trading, but anyway, I'm back, and hopefully I will be back for quite some time moving forward. As I said in opening, it was a very good week last week. Both Nasdaq and Dow Jones were above 6%. Nasdaq made it above 12,000 again, ending the week at 12,131 points, up 6.83%. Dow Jones, which previously has been down 8 weeks in a row, was actually up 6.24%. So also a good week for Dow Jones. And I can go straight to the prediction for this week, because if you look at buy and sell signals for the week ahead of us, they are really increasing. I will get back into details, but everything is indicating that right now market is in a way better position than it has been for a few weeks, where all the buy signals were extremely low. And the common way that we do this podcast is, of course, I tell you a little bit about the fundamental things to look out for. And we look at the chart, and then we try to conclude what will the week be ahead of us. After that, moving to a few quick analysis, and at the very end, you will get some specific trading tips. And I will tell you what I did last week when I did Tesla. I did Sumerica and one more company, but we will get back to that. This week is, like I said last week, I said it might be somewhat boring week because there were no special news expected last week. It's the same thing this week. There will be some drops. The most maybe important thing this week will be the labor market. But as I told you in podcast after podcast, now you will see the labor market actually starting to weaken. I will be very surprised if it doesn't happen this week, because it has to happen. It has to do with the inflation. And as I told you also many podcasts back, that the quarter results, you will hear them talk about inflation and how inflation is eating the profit and all these problems related to logistic and inflation. And these things will eventually lead to people being laid off. The hiring will go down and you will see an increase in unemployment rate. So these are the things, that's the one thing, except the Ukraine war, of course, that I think will be the thing that the market will focus on this week. The professionals, they already expect the same thing as I do, so I don't think there will be too much swings in the market from the fundamental point of view. The oil is just keeping the pace upwards. I told you I think it will go very high, and last week it went up another $4, currently trading around $116. And for those in the United States who is going on holiday today, well, you probably noticed that the gasoline prices are at the highest level for 4 decades. And it will most likely just continue upwards. There is no reason why oil should go down anytime soon. Everything indicates that there will be a real struggle in a few months ahead. We'll not dwell too much about the oil. What you have to know about the oil is that the oil and energy prices will affect the inflation. So despite Walmart saying that, well, we have stockpiled a lot of goods, Target said the same thing, and we know that they have to put some of it out for sale. We already see that consumers are spending less. That's a typical thing. If you pay more for your gasoline, you have to save somewhere else. Or your electric bill, you have to save somewhere else. And they see it in clothing and a few other items. The demand is now going down. So we will see these big shops, of course, they will do some sales, trying to get out some inventory, and that should reduce the inflation for that part, that segment of inflation. But it will not help much as the energy cost and all related to oil still is increasing, and I expect it to increase. And gold is up $13 this week to $1,866 per ounce. I have said for a very long time, I expect, first I said I expected the gold to reach 2000. It reached just above 2000, was 2070. But I think that during, it will be somewhat the next 9 months, we will see gold up at 2,500. Doesn't seem too likely right now, but I still believe gold will just continue upwards as people will, and we see this continue to move into more secure items. And the treasury yield, which I also mentioned every single podcast, have been now for at least 18 months. I think that you should keep an eye on this treasury yield, and it's already doubled. It's actually fell. Last week it fell. I said it was a good signal. It fell even 2 weeks ago, and last week it even fell, and it's down at 274. The reason why you should keep an eye on the 10-year treasury yield is because of the expectations for the interest rates in the future. And the interest rate will go up, be no doubt about it. It will go very fast and very hard. So Fed tried to cool the markets on Friday, saying that there are some signs showing that they might not have to increase the interest rates in too fast pace, but I'm pretty sure it will be the opposite, because the April numbers show that somewhat slowdown in the inflation, but this will just keep picking up with that high oil price, and there is no reason why all these logistic issues will solve anytime soon, meaning that there should be this pressure, continuous pressure, and the only way markets can deal with inflation is mainly through reduce the demand, and that is usually done by interest rates. They have a few other tools, but mainly is interest rates. So and that brings me to the real point why I mention the 10-year treasury yield again, is that I think now it's way too low. But it sets a sentiment for a good week ahead. It was last week, as I told you in last week's podcast, I told you the 10-year treasury yield went down. It was a good sign for the trading week ahead of us. I see the same thing now. 10-year treasury yield is down also last week, and indicates to me that there is a fair chance because market now is in a bit more positive sentiment. And before I tell you how the signals are, now we have a quick look at the chart. Here is one of the main things that you should take from this week's podcast. So after weeks and weeks, we had a natural correction upwards. And I believe this natural correction will continue upwards simply because we're just moving up from the bottom. I expect everything to move somewhere in the middle of the trend channels, meaning that there is at least room for one more week of upturn, maybe even a few more weeks of upturn. But there will be more down before we are finished. I have no idea if this upturn will bring us to 13,000 points at NASDAQ. Could be 14. I've seen many crazy things in the stock market before. But it could also be that it will just be a few percentages this week and then back into red. So by all means, there is nothing in the numbers that I told you. There is nothing on the fundamental parts saying that markets or situation has really changed for the better now. We are picking up from extremely low position. It's totally natural what you see now, this upturn. And you should not get too exposed in the market. If you're a professional trader, this is the market that you know. You are doing your trades now. You are doing that huge profit. As I told you, when market starts to rebound, there will be some insane profits, and Tesla went up more than 20% last week. Super good gain there, and many more stocks did even more than this. I think this might continue this week. But before we finally conclude about that, a quick recap. As I told you, there is no big fundamental news as I see it coming out this week. There is this job numbers. There are a few other things that you can trace some inflation numbers in, but in general there is nothing big. You will have GameStop coming with their quarter results before markets open on Wednesday. GameStop is a funny stock for trading, so I guess you at least will see some action in GameStop tomorrow and Tuesday, and for sure on Wednesday when the results are released. And that could be money if you are able to put your trades correct. At StockInvest.us, we analyze more than 38,000 tickers. We give them a buy, sell, and a hold evaluation. Based on this, we can tell how many buy signals are currently in the markets. And for weeks, you heard me saying that they are going down, down, down. Usually that indicates that the market should go down. But in week 19, it went down to 13. And I told you from now on, the markets will be extreme volatile because buy signals are very low. It's the typical thing where markets can fall 5% in a day and go up 3 or 4% the other day. And the week can be very brutal. And it's been like that. Week 19, it was 13% buy signals. Week 20, it was another 13% buy signals. But in week 21, in last week's podcast, I told you that the buy signals went up to 16 and concluded that to be a good sign. And this week, overall, across all tickers that we analyze, across all world, the buy signals are now up at 24. And that's a super positive sign because week 20, 21, 22, they start to make up a trend. And that indicates to me that it is a fair chance based on the signals that we are for an upturn also in this week. Going to NASDAQ, NASDAQ really had a nice jump last week, up from 8 to 23. New York Stock Exchange from 12 to 31, London from 8 to 20, Tokyo from 26 to 30, and China from 21 to 24. So we can see all buy signals across all countries. Buy signals are really increasing, and that is just a sign that people are more positive. So if you are a very observant listener or you follow me for a very long time, you may wonder, okay, when are the buy signals high? If we remember back when I said that the markets were way too overbought, they were up at 40 plus. 24 is by no means very high. when buy signal starts to get up to some 40, you should worry that now we are getting into overbought territory. As is, buy signals are at a very comfortable pace, as I would say. So signals, in my opinion, are somewhat good. But what do the chart say? And if you're listening to this podcast on Anchor, Spotify, or wherever you are, this podcast is also available on our YouTube channel. You can go to YouTube, just type in StockInvest.us, and you will find our channel, and you will see this podcast, and I will show you the chart. The ticker is Exig, and if we type in Exig, we can see the chart. And as I showed last week, that it was at the very bottom of the trend. It's a very natural point where things go up. It was struggling a few weeks with the bottom of the trend, but this reaction up is total natural. There is really no resistance before 12,500. I would even say 12,800 points. Then there is starting to become some resistance levels from the trading in end of April till the early May. In the chart, it's seen as gray bars. This is accumulated volume. It's about the volume traded at each point. So looking at the chart, I would say that it's a super fair chance that the market will at least go up to 12,500, should, in my opinion, be upwards to 12,800. There is a buy signals from the short-term moving average. It's still a sell signals from the long-term moving average, but the index just needs to move a little bit up, and that will turn to a buy signal as well. But there is a general sell signal from the relation between the long and the short term moving average seen in the chart back in April around 11th as a red star, and this is supposed to continue. And if you look at the trend is downwards, it's negative. Everything is indicating that the market should follow this trend for some time more. There is no real signals that it will move up. The only the first signs that we are heading for a much better market is if we manage to establish a new bottom above 11,200 points. So if we go up now and then have a downturn, we want that bottom to be higher than 11,200. If that doesn't happen, you can expect markets just to continue downwards. For the week as such, trying to conclude, I believe it's a fair chance that the market should go up. The relative strength index is 58 on the way up. It's not overbought. We have to go back to April, the beginning of April, around the 1st or 2nd. Then nasdaq got into overbought after having a nice upturn at 14,000, and then just fell all the way, as you know, back to 11,200. For the week as such, I believe that we should have, at least for the first part of the week, a continuous upturn. I think that we will test the resistance at 12,500. My personal opinion is that we might even bounce as high as 13,000. Then it should go a little bit back, probably end the week somewhere around 12,500. That means that I expect a little bit less volatility than in previous week, but in general the week should end in green. Will it be the very last week before we are heading for new downturns? Cannot say. It's too early to say exactly how it will be, but everything is moving according to what you can expect. Had a bounce up from the bottom, now it continues upward. It will test the resistance, as I said, 12,500 later, around 12,800, 13,000. If it's able to break that up, there will be so much resistance between 13 and 14,000 that is not likely anytime soon to have that sort of reaction up. But the general picture is we are heading for yet another green week. And that brings us to the companies. We will have a quick look at Apple, Microsoft, and Tesla just to see if the chart says the same. Quick look at Bitcoin and Dogecoin, and then you will have the trading tips. Apple was almost on target last week. I said that I believed Apple would end the week at $147, ending at $149.64. It was somewhat close, I would say. And in general, the direction that I predicted for all of them, Microsoft and Tesla, was also the correct way. What about the week ahead of us? Well, we will have a quick look at the chart and let the chart determine. And if you're a new listener, why do I look at the charts? Well, first off, Apple is a very popular company. For those who follow me know that last week I put a trade on Apple. I will tell you exactly how it did, but it went well, and I believe there is a little bit more to get from Apple. But looking at this major company gives you an idea about the market as such, and it reflects, of course, the index to some degree. Looking at Apple moved exactly as expected, moving up from the bottom of the trend. It's just the same thing as I said about the index now. It has more room, little resistance before $155 for Apple, later between $155 and $160. If it managed to break 160, it should go at least to 164 before it faces new resistance. Everything in this chart indicates that Apple at least should push upwards to 155, maybe 158 intraday, could be 160. This round numbers theory that you can see a few trades around 160 before it takes a little nosedive and fall back and test the resistance at the support at 155 and 150. So to conclude, not to make this very long, there is a buy signals from the short-term moving average, sell signals from the long-term moving average. The relation between these two is still a sell signals. It's still a negative trend. So there is nothing in Apple chart indicating that, well, we are going for new all-times high, etc. It's just indicating a natural reaction up and then most likely continue downwards. And I get a lot of questions, of course, and people want to try to learn. So should I invest in Apple now? Like I told last week, because Apple was one of the trading candidates last week, trading tips last week. At bottom, I saw the opportunity to maybe get 5% out of Apple because it is just a logic move up. I don't know if Apple now will just continue upwards, if everything goes back to where it was before, when it was at all-time high, if it goes up to 180. But I will not gamble on it. I was hunting the first percentages that was good. From a technical point of view, what I want to see is the same thing that I said for NASDAQ. Apple is moving up now, it's total natural. When it goes down, which also will be natural, I want the next bottom to be higher than the other. If I see this, I believe that, okay, it might get to a trend change for Apple, that we might see some changes. So what are these bottoms that I'm talking about? I'm talking about the pivot points. You see them in the chart as, in our chart, you see them as circles. There is red and green circles, and you can see this green circle which was put up on May 19 when the price was 137.35 for Apple. It gave a pivot bottom. I like to correlate this with volume. You see also the volume going up as the stock was down. This is called something called a sell-off. I mentioned this, if it was not last week's podcast, for sure the podcast before that a lot of the stocks show these classic sell-off signs, which usually is a good buy signals. So having that sell-off with that pivot point is usually a strong pivot point. Sometimes these points can be wrong. These significant tops and bottoms can be wrong. But if you have that combination where you also see a volume change at the same time, is usually a good thing. So what I want to see is Apple continue upwards, then turn. I'm not sure if it will be 155, 158, turn a little down, move a little sideways, and then fall back. For the week as such, I expect Apple to end somewhere around 100 155, I would say 154, 155. Will not be surprised if that will be the end price on Friday for Apple. Up, down, a little sideways, and we will see exactly where it ends. So when we get into the next week, if things starts to go down, that Apple starts to go down. What I want to see is when it goes down and it turns up, I want to see that next bottom higher than 137. If that happens, then I will be more positive for the longer term of Apple. But if you're an Apple fan, you want to get into Apple been doing good for years and years, so why not? It's a good level as is, much better than when it was around 180. Maybe too long about Apple. Quick look at Microsoft. Blast through Microsoft because it will just be more or less the same. It's a falling trend, the same thing that you see or saw for Nasdaq, same for Apple, you see in Microsoft. Buy signals from short-term moving average, and there is a buy signal about to be released also from the long-term moving average. But there is a sell signals from the relation between these two averages. The trend is negative. Everything is just a natural reaction up. What worries me a little bit about Microsoft is that volume did not follow in the stock too well. As the stock moved up last week, the volume actually fell a little. That indicates to me, and we can see Microsoft being more in the middle of the trend. There is a lot of resistance from today's level and up. That the upturn in Microsoft this week will not be the same as in Apple. I think Microsoft might push upwards to 280, maybe 285, who knows, then go down. But I think the resistance above is too hard. I will not actually be surprised if Microsoft end the week somewhere close where it is today, or actually have a small fall. But we will take a qualified bet where it will end, and I think I will keep a target for $277 for Microsoft by the end of the week. A little bit around today's level will be. If you wonder, should I buy Microsoft for long term, the answer will be the same like in Apple. I want to see a bottom higher, otherwise I'll let the trend be your friend, and the trend is negative as we speak for Microsoft. Then there is Tesla, and Tesla was also one of the stocks I traded last week. And Tesla is much more volatile than the other stocks. If you look at the chart, it looks more or less just like all the three other charts that we had a quick look at. Sell signals from the relation between the long and the short-term moving average, also referred to as crosses. It's major longer term buy and sell signals. We can see there was a buy signals, for instance, in Tesla back around May 20th. And Tesla went from 800 to 1145, then started to fall, and we issued a long-term sell signals in the end of April, and from that point Tesla been falling from around 950 all the way down to 600 and 2030. Now it's moving up as it should from the bottom of the trend. It's still far up to the middle of the trend. The middle of the trend is around 850, and I think there's a fair chance that Tesla will go all the way up to at least 850, may even be 900. Buy signals short-term moving average, but like the other one, sell signals from the long-term moving average. And as I said, the relation between these two. Volume a little bit better than we saw in Microsoft, is following the stock a little bit more. But there will not be a very free lunch. For the end of the week, I think that we will see Tesla end above 800. I will have a target for 810. If it will be able to break 850, you should see a reaction upwards to 1000. I'm not sure that is likely. I think, like I said in Microsoft, Apple and Tesla, that Microsoft and Apple, and for Nasdaq, we are in the downwards trend. It's just a natural reaction up. Now we are playing these short-term gains, and we will get out of the trade soon. quick look at Bitcoin, Dogecoin, and then you will have the trading tips. Not much to say about Bitcoin. It's moving horizontal. It needs to get about 31,000. If it gets above 31, it should go very fast to 37,000. From a trading perspective, usually I would say this is a very good trading opportunity. Pick it up now. I already have got back at 30. For those who follow me, I've been on this podcast for more than 2 years, more than 110 podcasts I think it's up to now, in a row, every Monday before markets open. You hear me say more or less the same thing. And you heard me a long time ago when Bitcoin was 30. I bought at Bitcoin and offloaded when it was some 60, 65. And I said, if Bitcoins get down to 30, I will buy again. I bought Bitcoin now, loading up, because I think it's a fair chance that we will see Bitcoin go up from here. It will be a total or a natural reaction from the bottom of the trend. Doesn't say the trend shows that Bitcoin should continue downwards, but it should have, like in the other charts, an upturn, a short-term upturn. So I think the risk reward is good, especially if we manage to move about 31,000. We can see very, very fast reaction upwards to 37. So that's the range I'm hunting now. I will do as following. I know a lot of you love crypto. I know a lot of you have lost money on crypto and desperately want some sort of advice what to do. I personally will do like following. I got some Bitcoin now. When and if crypto Bitcoin go up to 37,000, I will start to look for possibilities to sell. I might sell half of it to secure some profit. The rest I can just leave for the future. I will have a quick look how things move, because if it moves too fast, it will be a downturn again. So I can sell at 37, get back at 32 or 30 or whatever it will be. But I will evaluate. But that's how I will play the game. I'm in now. If I'm wrong, if Bitcoin goes below 28, it can fall very fast to 20, and Bitcoin may even go to 10,000. You never ever know. This is just a gamble, like everything else. Technically, there is not much positive things in Bitcoin. There is a sell signal from the short-term moving average, like it was in all the other charts. Still sell signal from the long-term moving average, the relation between these two. So nothing indicates that we are done with the current correction. We are just talking a short-term correction upwards. But as I said, I think there might be some good gains. Quick look at Dogecoin before we head to the trading tips. Because Dogecoin represent other things, and we just see the same thing. I think there is a fair chance that you can do a short-term trade in Dogecoin. It's good to share trades, and those who follow me know that I did the Dogecoin from 20 to 40, sold at 40, then I bought back at 20, and that trade I still have. Of course I should have sold it, but as I said, this is just a small bet. Currently half of that profit, half of that investment is gone, with Bitcoin being just above 8 cents. I bought at 20. So is it good to buy more to get your average down? Should I now buy more Dogecoin? Doing this, unless you expect something very if you're very certain that the markets will go up, that everything is on a new upturn, of course averaging down is a strategy you can use. But in general, most people lose money when they start to averaging down, because things can get very worse. There is no reason why Dogecoin cannot go to 2 cents or even a cent. From a technical point of view, it's at the bottom of the chart. It represents a singular buy opportunity. From a wider point of view, it's a longer point of view. There is nothing in the chart indicating that you should get into Dogecoin for a long-term view, unless you have very strong belief in crypto. You can use these to slowly build up your amount of crypto. it might, I should never say never, I might get tempted to do a few dogecoins, because right now there is a buying opportunity all the way up to 15 cents. But you should not waste, you should not spend money that you're not able to waste, because here it will be no free lunch, and easy come, easy go, and I don't want you to lose money. But it could be a speculative bet. For the end of the week, I expect Dogecoin to end somewhere around 10-11 cents, so I remain somewhat positive. End note for the crypto. I've been wrong about crypto for a few weeks, so do your due diligence. That brings us to the next part, quick summary. We see that all the charts are in a negative trend. We see they are moving up from the bottom of the trend. We see this in Bitcoin, we see this in Dogecoin, we see it in Tesla, Apple, and Microsoft. We even see it for NASDAQ itself. We see the same thing, the same pattern. And whatever technical analysis book you study, whatever you do, you will see the same thing. This is natural reaction up. In most cases, things will start to turn in the middle of the trend and continue downwards. So, based on this, based on what I said in the market section, everything indicates that there is a fair chance we will have a green week, because there is more room for upturn. But it will be an acid test somewhere by the end of the week, because then things should be close to the middle of the trend. Will they break it? Will they go up? Could indicate even more green weeks. But we are for sure at the breaking point where I think this will be a green week, and the next I'm not so sure. Enough said, let's go to the trading tips and see if we can make some money this week. Finally, we are at the trading tips for the week. Let's start with last week's tips. Last week I told you I wanted to buy Tesla, Apple, and Sumerica, because as I said, I thought there were a very good upside in these stocks. Not so much in Apple, but for the other two were a little bit more risky. I also told you that I would probably place my trade around 10.30ish, because that would probably be the low point on Monday to get the stock as cheap as possible. I didn't buy exactly at 10.30, but on average it was between 10.30 and 11.30. I think I picked up most of them. And that will be one of the trading tips for this week, is try to understand how stocks move and behave. Because some stocks follow a very classic pattern. This thing about 10.30, as I told you, is just an overall classic movement for stocks that we see if it's a negative day. If the last day was very negative, you often see a negative opening, and stocks bottom at a low just half an hour. Could be anything from quarter to 45 minutes after opening. Then they start to go up because it's the first people that want to sell off the shares, and based on the market hours, after market hours, etc. But you have that negative opening and then a more positive optimism during day come. Very often they move upwards still just 1-2 hours before closing, and then you can see a new change where things might go down at the very end of the days. These are typical things. More interesting is that each individual stock has its own pattern. So I very often use this. I check stocks to see when they have their classical high and low during day. Helps me find the bottom. And I did exactly that. So I was looking at Tesla, Apple, Zoom, trying to get a very good position. I didn't manage to get the absolute low, but it was somewhat okay. I got Tesla at 642.50. And was struggling with what kind of stop loss I should use for Tesla, knowing that it's very volatile. I was first on the idea to put on the standard 5, which I kept the week before for all of them, because I was out traveling, I was very busy, I cannot follow the day stock during day. I use trailing stop loss. If stock goes up, the stop loss goes up. If its stock starts to fall, well, the stop loss remain from the high point, depending on the amount you have set, either in dollars or percent. So after long thinking that, okay, the market, as I said, I would increase my general exposure in the market a little bit more because I felt it was very ready for a short-term bottom. So I decided that I would go for a 10% stop loss in Tesla. I kept a 5% stop loss for Apple, and for Sumerica, that third trading tips, I also kept a 10% because that's a really volatile stock, which I said can do very well. Let's start with Tesla. As I said, I bought Tesla 642.50 and Tesla went up. On Tuesday it fell and it started to get very close to the trailing stop loss I had, but then just continued up, and by end of the week Tesla ended at $759.63. So for this trade I am up 18.23%. So I made almost 20% on Tesla last week, but this trade is still on. It's still open in my account, has a 10% stop loss, meaning that whatever happens, I will make at least 8% in Tesla. But you heard me through the podcast, unless you just rewind forward to this part to get the trading tips. You heard me say that I think there is more room for upside in general in the market, but that we are getting close to the middle of the trends where things can start to turn. This means that I will start to tighten my stop losses because I think we can have it all. You heard me say for Tesla, I think Tesla can go as high as 850, and I want to be on that train if it goes up to 850. But I will have a quick look after this podcast. Will I keep 10? Will I go down to 8 or 5% stop loss to get more of that profit I already have? And you may ask, why don't you just take 18% profit and be super happy? Well, usually I am super happy with even 2% profit. But looking at the chart, everything is indicating that Tesla still can continue upwards. And that is exactly why I use trailing stop loss, because this decision is the hardest decision that you make. Should you sell? I can sell now, be super happy, but then Tesla go another 40%. Who knows? And you will start to blame yourself. So doing this trailing stop loss is very, very good. Trying to find that very good stop loss for the stock. Should it be 3%, 5%, 8%, 10%? It's an exercise. Use our ATR value that you will find on our chart. It tells you how much the stocks move during a day, so you're not cut short by natural swings. Anyway, the thing is that I have 18% profit now. I think there will be more. No matter what happens, I will not for sure increase the stop loss. It will maximum be 10%. So no matter what happens with Tesla, I will get 8% profit, around 8% profit. But with a possible upside, I think it's a fair chance that it will continue up. Greed and fear. Check out my very first podcast. It will teach you anything you want to know about greed and fear, how it drives your decisions. I'm not trying to be greedy. I'm not trying to be fearful either. I'm just trying to use a strategy. It works very well for me. Tesla still open at 18.23% profit so far. The other stock I bought was Apple, 138.50 I got in. It was lower than that. I think it was down at 135. I was not able to time the bottom exactly. Turned, I think it was a little bit sooner than I thought, if I remember correctly. But it is currently at 149.64. The stop loss was never triggered, up 8.4%. And then there is Stromberg. I told you about this tip, which I say is high risk. It's just this penny shit stock that could yield very much. Bought it at 22.3 cents. I've been in and out of Stromberg many times. I know the stock, and usually it yields good. ending the week at 23.60, up 5.83. So none of my stocks were sold simply because the market was in general moving more up. It was not too big swings last week. So all the stocks which I traded last week are still open. They are not closed. They can be closed anytime. No matter what happened, I will have a huge profit from last week. So what are the trading tips for this week? I will keep my Tesla. I'm not sure really if you should buy Tesla. If you buy Tesla, you should be watching it closely. Try to get that gap between 750 850. It's $100. It's even 15% or more that you can gain. But it's not as dead certain as it was last week. But it's a possible trading tips. Apple got more upside. You heard me say that in the technical analysis. I think that there is more upside to be done in Apple, not so much in percentages, but a little. From these two, I'm not sure I will advise you to get in, but Sumerica will be its open. I have an open position, I think, at 23.60. Which is the current price for Sumerica. I think there is very good percentages to be made. Last week, the big heavy lifters were moving very fast. Usually we see in the second week, we see some of these shit stocks pick up. And I think, as in gamble, because this is a gamble, I think you can do some good money. Will not be surprised if it will be a 20% gain in Sumerica during this week. And not surprised if all of these trades will be closed. Sumerica is one tips. I have two more for you. One is Micron. I think there is a good chance that Micron will yield some. Just so you see yourself, I'll just pick up the chart again. You can see this podcast on YouTube. You will see the charts and I will try to just quickly explain what I see. I see a horizontal movement, sideways movement between let's say 66 and $74. This will be called a rectangle formation. It just gives buy signals from the long-term moving average, has a buy signal also from the short-term moving average. Relative strength index is moving up. The volume is not following the stock so good. So what you normally should expect, a small reaction back down maybe to $70 before it pushes up. But if it breaks $74, let's say $74, $75 upwards, you should have a $5 movement upwards to 80. That should be some 7-8%. After 80, there is hardly no resistance above. So I will base this trade on the following thing. I'll try to get in as low as possible. I hope it will have a small dip on opening, maybe early opening, allowing me to get in around $71, $72. And if I get correct, you will see an increase in the volume. It will start to push up to 74, 75. Pushing through this, it should break very fast. Go up to 80, maybe struggle a little bit with 80, and we will see if it will be able to go above 80. I will keep a trailing stop loss for that stock around 5%, and it might be that I will have a profit that will be reduced when and if it turns around 70. But Micron will be one of the trading tips. Looks very fair chance for me that there is at least 8% upside, and if it breaks 80, it can go very, very fast. So Micron is one of these stocks. The other one is Robinhood. And Robinhood was famous for the rallies in GameStop and AMC last year. It's a trading favorite for many small companies, trading brokers. We see somewhat the same thing like we saw in Micron. What I think will happen here is it just gave a buy signals from the long-term moving average, has a buy signals from the short-term moving average, and given a little bit more, we might even get the buy signals from the relation between these two. We just have to have that short-term moving average moving a little bit up, and it will break up over the long-term moving average, you will have a general buy signal in the stock. Will be somewhat risky trade. It's not super obvious. What I'm gambling on here is that the $9.50 to $10 support will hold, and that the stock will move upwards. It's not the very best trade. It's a very speculative one, and I'm aiming maybe to see all the way up to $12. So these are the three trading tips for the week: Zomedica, Micron, and Robinhood. Last week was a super fantastic week. Will this week be equally good? I'm not sure about it. I think one or more of these three trading candidates will do very good, but I will be surprised if all three of them end in green. We just need to be more in green and red, and that will be the money maker all of it. We are at the end of the podcast. Became somewhat long podcast. I'll repeat something I often repeat. Our aim is to try help you increase your gains, reduce your losses. It's a good trading strategy. You reduce your losses using trailing stop loss, or for sure setting a stop loss level before. You reduce your losses by looking at the long-term picture. That is why I week after week focus about general things, about fundamental things, because you can be lucky in one trade, but in a negative market it's very hard to keep a good trading strategy. So the best thing is to reduce your overall exposure, have money in the bank. You heard me say that half a year ago or more. Now I put money in the bank because cash will be king. I will be in when there are super red days, and I will sell on the green days. Now we are in a situation where we might have yet another green week. By the end of the week I might be out of many of my positions because we are not over with the downturn yet. If you get that overall picture, try to reduce your losses and increase your gains. The way to increase your gains is using trailing stop loss is fantastic, because if the stock continue upwards, your trailing stop loss will move upwards. You will lose some. I can try to teach you how to sell at the exact top, because you can use volume for this. When the volume is peaking, a stock normally is peaking as well. It's a super good sell signals. We can use many small techniques to find that exact bottom to squeeze out all the percentages. But if your life is somewhat like my life, you will be busy. You cannot sit in front of the screen all the time. You cannot follow the stock every single minute, and if you do, it will take a huge part of your life, unnecessary life. You will be full of stress. You'll drink too much coffee or cola or whatever you do, watching that screen 24/7 as every minute counts. To avoid that, use good strategies and have more excitements from the other parts of life which you can use. You can still make very successful trading. In a few weeks, I will start a new series of podcasts where you will follow some very specific trades. We will start with a very small amount and see if we can trade it up. At that part, we will have to follow the stocks more closely than what I do in this podcast. Because in this podcast, I give you some trading tips. I buy them myself on the Monday morning. I put on some trailing stop loss. And by the end of the week, I tell you how it goes. Next week, you will know how these three trades go. And until then, all I can do is wish you a very good week. And we will speak in just a week. Bye.